I want to move on to debt management. So this is something that affects a lot of people, a lot of Americans. And typically during hard times, we spend our way out of our, financial, like when our economy is bad, we spend our way out of it. We get the economy back on track by spending. So that being said, there is good debt and there's bad debt to have. Typically, good debt are things like mortgages, sometimes student loans. Some student loans are really beneficial. They, help you have a good credit rating. They show that you're credit worthy, that you're paying your debt obligation on time, that you're reliable. So you get a better credit rating. Same with a mortgage. If you're paying your mortgage on time, they love that. Credit cards too. Like if you're paying your credit cards on time, that's gonna look really good on your credit report, as well as like if you're not maxing out your credit cards. Like if you ideally, this is my number one tip for credit cards, pay them off every month. Do not carry balance. Don't make an excuse and be like, oh, I had to buy this expensive thing. I had to buy this plane ticket. I'll pay it off for the next 3 months. Don't do that. Have the cash on hand. Be prepared to pay cash for everything you buy, but you can use a credit card to rack up points. It is beneficial for your credit score to um, have credit available to you, to have good credit available to you, have a fairly low utilization rate. Kind of a funny thing. I have a few more cards than my husband. Like I have a couple of store cards and whatnot. And he only has one credit card. So we were getting a new mortgage recently, and his credit score was slightly lower than mine. um, so it's interesting. It's basically an algorithm, and you have to just work that system. The other thing to think about with credit scores, I highly recommend that you check your reports with the 3 agencies at least once a year. The methodology I recommend for doing that, if you have the time, put it in your calendar. Every 4 months, you get a free report from one of the 3 agencies. So you say, okay, in January, I'm going to get TransUnion, and then you just go down the line like that. Like in April, you'll get Equifax, and then in August, you get TransUnion. Like just bing, bing, bing. Just put it in your calendar and do that. And the reason to do that is you're keeping a closer eye on what's going on with your credit in case of fraud, in case of mistakes. You can catch it sooner. So if you are in a position where you are serious about like buying a home, you want to be prepared. You don't want to have fraud on your credit report. You don't want to have a mistake on your credit report. You want to like have it nice and clean, and you want to have a nice high score. The other thing, so credit card debt is really common, and it's one of those things that you can deal with it. You need to prioritize paying it off. There's a couple of different methods for doing that. You can either pay off the highest interest rate cards first or the smallest debt first. There's pros and cons to each, some of which are psychological, and I do not discount the psychological when it comes to personal finance. So do what works for you. You can look up the debt avalanche method versus debt snowball. Look both of those up and pick one and just do it. Just get rid of that stuff. It's bad for your mental health, and it's bad for your financial health. Yeah, okay. Then the other, let's see. Oh yes, I wanted to talk about debt management for home buyers. So a couple things to just prepare yourself for, like running the credit report. Make sure that's good. I had the experience of when I was buying my first apartment, went to run my credit, and I discovered there was a mistake on it, like a weird glitch from a bank saying I owed $1. $1. Yes, I owed them $1. I got that cleared up, but it took time, and it was on my credit report. So check your credit reports regularly. So the other thing to think about, so if you're considering buying a home, I recommend that you work with a mortgage broker in advance. That they can run, they can get a pre-approval to see how much you qualify for. That being said, what you qualify for isn't necessarily what you can afford. So what you need to do is, look at what the mortgage payment would be, the principal and interest payment. Look at how much the taxes will be on the property, insurance, maintenance fees if it's a condo or a co-op. Co-op, the property taxes are included in the maintenance. And then the upkeep. Owning a home is a little bit different than renting. If your toilet breaks, you can't call your landlord. You just have to fix your toilet. So, bear that in mind, that there are additional costs, and see if it works in your budget. So again, we're going back to the budgeting. Budgeting is really important to understand what you can afford. You plug those numbers into your budget and you say, I can't afford this housing payment, that they're saying I'm pre-qualified for. So, look at both sides of that, and make sure that you are qualified for, something, but then also make sure that you can afford it. The other thing with working with a mortgage broker, they will shop around and get the best rate and the best terms on your mortgage based upon you and your particular situation relative to underwriting. What's your credit like? What's your employment history like? Are you self-employed? Do you have a lot of assets in the bank? Or or do you not? Do you have how much do you have for down payment? So it's great to work with professionals that can really work it and guide you in a way to help you get the best situation. Sometimes people, they'll just go to their local bank or the bank where they have their checking account and talk to them about getting a mortgage, and they don't shop around, and they don't get the best rate. So it's really key to shop around. So that, let's see, student loan debt, understand the type of loans you have and the types of repayment programs available. You have to do your homework on that. You have to see, there's a lot of different types. There's a lot, but there's a number of different types of loans with a number of different types of repayment plans, some of which are income based, some of which are not. And you have to figure out what's going to be the best for you. If you believe you're eligible for forgiveness, approach that with caution. There's actually, it's been in the news lately, which I think is really helpful because a lot of people have been screwed over. Approach it with caution. Be really meticulous with all of your records. I know people call in to their loan servicer and they get misleading or just flat out inaccurate information from the loan servicer. Either the person you're talking to on the phone is incompetent, or maybe there's something worse going on with the company where they are, purposefully misleading people. I don't know, but things need to change in that realm, and hopefully they will. But be really meticulous and careful with that. Make sure that you meet all of the requirements for loan forgiveness. Make sure you're keeping good records.